Hello, I'm Bill Watson, CEO of First Super, and welcome to our market update. Joining me today is Andrew Jewell, our Executive Manager Financial Advice and Education, who looks after advice for our members, and KC Lowe from Frontier Advisors, who are the fund's asset consultants. They provide us with advice on how to invest our money, and more to the point, how do we deal with turmoil in the markets at present. So welcome, KC. We know many of our members have got to have questions about what's been happening in the markets, Australian and international, over the last few weeks as we've seen coronavirus roll around the globe. Markets around the globe have experienced a significant downturn, and in the industry we know that as a correction. And that's due to the impact of coronavirus and the uncertainty about what's happening at the moment and what will happen in the future. So today we want to share with you a few of our thoughts on the key issues. So firstly, KC, what are you and the guys at Frontier seeing, and what are the things that you think our members need to have a think about?
Thanks, Bill. So maybe let me first off cover off what's happened in the markets, and I'll talk about what
That'd be terrific. That'd be great.
So to start off with, financial markets has been very volatile in recent weeks. If you look at global equity markets, they have fallen by about 30% or more. But you have to remember, in other asset classes like government bonds, because of the negative sentiment that's been impacting markets, government bond prices have increased, so providing some cushion.
So some assets have been going up, while
Yes.
others have been going down.
Yes, correct. Another asset that has provided some support for portfolios is the Australian dollar. So that has fallen from about 70 cents at the start of the year to about 55, 56 cents now.
So how's that provided an upside?
So not so good if you're importing goods from
Yeah.
overseas, but as an Australian investor with foreign assets, as the Australian dollar falls, the value of your foreign assets increase in value. So it has provided some offset or some cushion to the value of your foreign assets as well.
Okay, so there's a bit of a silver lining there, and given we can't travel overseas, we don't have to worry about how much the Aussie peso will buy.
Yes, yes. So in terms of what we do know, this coronavirus is spreading globally.
Yep.
Governments are responding, and they are responding in an increasingly aggressive manner in terms of containment measures and the like. What we don't know is, of course, how long this will last.
Yep.
But in terms of the impact on the market, what we'll say is that it is not uncommon to see markets fall to these levels every 7 to 10 years.
Yeah.
So our emphasis as to members of First Super is that your superannuation is long-term investments. So we would say that given these sort of events do occur not too uncommonly, that it is better not to try to time the market in these sort of events. So that's in terms of what's happening right now. In terms of our expectations, I would say that yes, the economic outlook is looking quite grim right now.
Yep.
We see all these containment measures being placed around the world, especially in Europe. It's likely the economic impact is going to be more negative going forward, especially in the US, where they've only really just started the containment measures. But there are also some positive side to it. Central banks and governments have announced quite large fiscal and monetary stimulus to support the economy.
Yeah.
Now, this may not do much in the short term. We may not get people back to work or help with with the quarantining measures, but it does actually provide some help in terms of businesses and households struggling with cash flow issues.
So to keep the economy afloat
Yes.
whilst things pick up.
Yes. And given the extent and the size of these stimulus measures, you could actually see quite a meaningful pickup and quite a sharp pickup in economic activity once this outbreak comes to pass. One thing to remember for members is that financial markets are forward-looking, so even though there's a lot of panic right now, it's important to stay calm and think about that this isn't going to last forever. It will come to pass, and as we said earlier, governments are doing a lot in response to it, so the potential recovery could be quite strong. So I think I'll emphasize that as members of First Super, that your investments are long-term investments. They are invested in diversified assets. So it's important to keep that in mind and staying calm throughout this period as well.
Terrific, KC. Really appreciate you coming along today. So over to you, Andrew. You've been at the pointy end of things, you and your team, Peter and Jason, in the last 4 or 5 weeks, really. So what are the things that the members have been asking you about? And in response to that, the worries that members have had, what's the advice that you have for members and their families? How should they be responding in these troubling times?
Sure. So naturally our members are quite concerned what they're seeing happening with their superannuation balances at the moment. So what we tend to do in our conversations with them, in a very general sense, is to explain to them about how their superannuation is invested at this moment in time. We talk about the length of period that they're looking at having their superannuation invested. We then also, if members are quite interested in switching investment options and certainly to cash, which is what we're seeing at the moment, we talk about the time and the timing of that risk.
I'm just holding you there on cash. So some members are seeing, I think, cash as a bit of a safe harbour. You get out of what's happening in the markets at the moment, the growth assets, and you move into this safe harbour for the time being. I think if you look back to 2008, 2009, members switched into the safe harbour. But what they've found, I think the observation is what they've found is being the safe harbour is not necessarily the best place to be.
When we talk to members, we talk about time in the market.
Yeah.
So for an example, and let's just use share as an illustration, if a member had a share for $10 and then that suddenly dropped down to $8, it would raise concern with them. If it dropped down further to $7, they may start to decide to cash in that share into cash. And then it could drop down to $6 by the time that transaction actually has occurred. If that share should drop further in value, $5 to $4, the member feels good about that decision.
Because they've got out and saved some money.
And they've got the $6. But that share at some point in time, and as you and Casey have been discussing, is the share market will rebound, and the likelihood is that it will start to rebound very quickly. So that share that's now valued at, say, $4 suddenly jumps up to $7. And the member might decide, okay, this is the time to buy back into the share market. And again, by the time that they do, that share price has risen to $8.
So they've lost, by getting out early, as it were, or getting out into this safe harbour, they're finding that the other boats have moved on and they've given up potential upside.
Upside of it. And hence that's what we refer to as crystallising the loss.
Yeah.
Whereas what we talk about when we say time in the market, it's simply thinking about how long have you got your superannuation invested for.
Yeah.
And for the majority of our members, we are talking that really it's there now for the next 5, 10, 15, 20 years. So they can actually allow to remain in the market and allow for this correction to play out, and consequently as the markets rebound, that is where they will benefit, and they will benefit more strongly potentially than someone that's switched out to cash and then has tried to switch back in again.
So what we see is markets do recover, generally speaking markets recover, and that if you hold your nerve at some stage, what's occurring just at the moment will be a memory, and whilst it's been unpleasant at the moment, won't necessarily be a painful, unpleasant memory.
Yep. So again, members just have to keep in mind about the time frames. So certainly if someone is needing to cash in for their superannuation, for whatever their personal reasons are, not everybody has superannuation in which to retire upon, but if they were looking at cashing in their superannuation in the next 12 months, then there may be strong reasons why to consider cash. But if people are looking beyond that time frame and looking at having their superannuation as a source of income in retirement we're talking about another 20 years as well.
So people have got different time horizons, and so they're really different motivations.
Yep.
And I think what I'm hearing from you, Andrew, is there's no substitute for getting advice or individual advice for where you are at a point in time. So, if I can pick somebody who's a 50-year-old that's thinking about retiring 15, 20 years' time, they're really different from a 65 or a 75-year-old member. They've got different needs and wants.
Needs and time frames as well. And sometimes what our members don't always realise is that with our investment options, you can spread your funds across those different investment options. So again, when we speak with a lot of our members, they are thinking about switching their entire balance into cash. If we take the balance option as an example, 60% of that superannuation fund is invested in growth assets.
Yep.
40% is already in defensive assets, such as cash, term deposits and government bonds already.
And so there's some protection there in falling markets. And I think, Andrew, that's an important point. We've only really talked about two investment options. The balanced option, which has got a 60-40 allocation, and cash, which has got a 100% allocation, 100% allocation to defensive. We've got another one called conservative balanced, have we? And that's something in between.
It is. So that one is weighted more on what we call the defensive assets. So 60% of the funds are invested in defensive assets, and 40% is in growth as well. And if people still have a strong concern around that, they can elect to use a proportion of their funds to invest directly in cash as well. So you can rebalance or strengthen the cash component.
So it's not like a thing where you either pick the balanced option or you've got to have all your money in cash. You can mix it up.
Mix it up as well, yes. And that, to some people, provides that little bit more comfort and that certainty around that.
And I suppose for people who are thinking about retiring at the moment or have got some needs, moving a portion of their pension account into cash gives them a buffer that's protected, but then they've got however much, whether it's a lot or a little, in one of the other investment options, at least keeps them in the market so that when things recover, which inevitably they will, at least they're not missing out, they're not stuck in the safe harbour as it were forever.
That's correct, yes. And that's where our financial advice team can come into play. So we will provide a recommendation potentially about how that member should maybe invest their funds.
And that's a recommendation that's personal to the member, isn't it?
It is personal, and there's a particular process that's behind all that, and we must provide that in writing. However, there's no additional fee to our members because that's part of their membership costs.
Yes. So it's rather than a one-size-fits-all approach, and we're talking in generalities here. You can sit down with a member, you, Peter and Jason, sit down with a member and provide them with a plan that's suitable for their personal needs and also what appetite they've got for risk.
Risk, exactly.
Yeah, so if they want the doona up to their nose, you've got that option. They've got the doona around to the belly button, you've got another option there as well.
And if a member just simply wants to just talk about the investment options that are available, we do have our local coordinators and our member services where we can just provide an overview of those investment options as well.
Okay. So thanks, Andrew and KC. I want to assure you that we, the team at First Super and our advisors, Frontier, are doing everything we can to make sure that your assets are protected in these troubling times. We're meeting very frequently at the moment and we're reviewing what's happening in the markets. Our board met earlier in the week and I know we're going to have another meeting next week just to keep an eye on what's going on. So as Andrew and KC have said, superannuation is a long-term investment, and for many people starting your retirement, you're going to be retired for a long time, so you need to make it work for you. It's important that you follow the advice of experienced experts that we have and seek advice from financial advisors whenever you can. We've got a team of people here at First Super who can look after you. They're available over the phone, they're available over video conference. So I'd really urge you to pick up the phone on 1300 360 988, give them a call because they're ready and willing to speak to you. So thanks for tuning in to us at First Super today.